Good evening, everyone. We're going to get started here to be respectful of all of your time. For those of you that have scheduled to sign up for it and are either going to join us late or unable to attend, is going to be recorded and will be shared with everybody. Really excited to have a moment to go over Colman Yards with you. By way of introduction, my name is Scott Lurie. I'm with F Street. F Street is a three vertical real estate development firm focusing on multifamily development, industrial, as well as a lending practice. My partner, Josh Jeffers, J. Jeffers & Co. has been doing phenomenal real estate development throughout the United States with a focus on historic tax credits, as well as other grants and community involvement in most of his transactions. And Colman Yards is no different. So we're going to run through a brief presentation on Colman Yards. If you have any questions, feel free to type them in the chat. Those will be moderated by Mike Doney, who will be sharing those with me, and we'll be able to answer all your questions. Once again, thanks for being here. I'm really excited to run through Colman Yards and appreciate your time this evening. This is a recorded event, and so we will be sharing this with you. This is what the lawyers tell us we have to tell you. There's investment risk to any investment you make. This investment is only open to verified third-party accredited investors. We have chosen to raise our equity through the 506C distinction under the SEC, which requires a third-party accreditation. So if you have issues with accreditation, we have a seamless process at fstreet.com to get accredited. It is free of charge, and this investment, once again, is for only accredited investors. Let's jump in. So a catalytic multi-phase master plan. What is Colman Yards? It's exactly that. It's a live, work, play community, creating new accessible jobs, a complete brand new redevelopment of what was a historic industrial property, 26 acres in Rockford, Illinois. As a brief update, because some of the content you've seen is happening, the project is actually just broken ground. We're underway for the development. The development has happened. We are backfilling the equity as we have a little equity to remain. I'm so excited that we already broke ground. Here's a picture of the development, the groundbreaking. This was a ceremonial day, which was a blight in Rockford's community that is now under construction. Your investment is coming in currently into an unbelievable opportunity. And the nice part is, you know, that your investment dollars are starting to work for you right away, and the investment is already moving forward. On September 29th, all sources of financing for phase one on the project, that's the debt financing, has been closed. The equity has been backfilled, and we'll continue to backfill it with investors as they continue to make investment. J. Jeffers and Co. and the economic development team meet twice a month to go over this project. This is a really big project in Rockford, so we're really excited about it. Having been on the site, and when you get to see the scope of 26 acres and the redevelopment and those massive industrial buildings that have been a total blight, it's a really refreshing new development that the community, the leadership of the community, as well as the development team, is going to be really proud of when this is all done. So we hope we can count on your investment, and let's walk through some of it. So here's what Colman Yards is going to render out and look like. Remember, we talked about work, we talked about play, we talked about living existence. This is a really exciting transformational site. A few other renderings of the community, as well as what's going to be. This is already, these buildings are under construction, and this is what is Colman Yards today. Colman Yards is a multi-phase development. So if we talk about Colman Yards, Colman Yards is 26 acres long, wide. It sits on a massive parcel of land that sits currently as a blight, but we're working to restore it. And as you can see here, it's grand in nature, not only by size and scale, but also by building aesthetics and architectural aesthetics. So when I talk about multi-phase, let's start with how we as developers look at projects. So we take projects and we create what we call a master plan, right? So this master plan that you see here involves all of these buildings. This is all of Colman Yards. Colman Yards, as I said, massive, 26 acres. We're gonna focus on this space carve out right here. And so this basic carve out is basically phase one of what is the first phase of the Colman Yards development. And the nice part about this is there is so much money coming in to benefit phase one as well as all the phases that is coming by way of grants and historical tax credits and additional grants from the community, city, state, feds. And we're gonna walk through that capital stack, but it's got a phenomenal capital stack that's providing what is over $100 million of investment into our transaction, which is 250 units, which will only have a very small debt load and huge opportunity cost per unit. So we'll get into that in a minute. The total amount of units when all done will be over 900 units. The first phase is 215 of those units. So here's phase one, stage one development. Here's what we're looking at for Colman Yards. Estimated start was September. It started actually in October. The project is actually underway today with infrastructure and the grant side of the business and the infrastructure side and the remediation side and the stabilization side is already underway. We're talking about historic rehabilitation and adaptive reuse. If no one's familiar with this, you see this a lot in malls, you see this a lot in housing where someone takes a former use and we adapt that use into another use to take bone and structure, historical elements, and keep them all part of the development to keep the integrity of what was, and then also take what will be in the future. We've got 3 historic buildings in the stage one, totaling 215 apartments. So we've got 215 total apartments that are going to be completed as part of this first phase that we're entering into today. There will also be 23,000 square feet of commercial space. Commercial space is desired in Rockford. Once you get to Rockford and you see the community and the desire to have commercial units, we've already entertained a lot of interest already in this 23,000 square feet, and equal to commercial as well as the apartments, as we already are building a new structure, 336 spaces for parking, which is huge. Each unit parks at a really nice ratio, and it's a very important piece of the puzzle. As I said, shovel ready, we're already broke ground and we're getting underway. We already have a GMP, or guaranteed maximum price contract, with the general contractor. And we have state and federal historical tax approvals, part 1 and 2, by the National Park Service. City of Rockford has also provided us with tremendous incentives and financing to lower the risk to you, the investor. And that's really an important piece of this. That's, you know, when you ask, or if you were to ask, hey, how did you even get involved in this? And why are you involved in it? What's the compelling discussion for you? So Josh Jeffers and I have been co-developers in terms of separate investments, peers of each other for several years as we exist here in Milwaukee, Wisconsin. Josh and I are also friends, and we talked about co-developing different projects. And so this was a very intriguing project because the capital stack really is over $100 million, and only 30 million or $29 million of it actually comes into the apartment complex side of things. And then when you put the pace and all of the other equity, the liability that sits on the 215 apartments is incredibly low. And so for that reason, I knew that we could make a compelling thesis to invest here. And in addition to that, the exit, which is a 4-year exit, is going to be done through a HUD refinance process where you as the investor should be targeting a mid-19s IRR over a 4-year hold, which is a phenomenal return. That equates to about a 1.88 multiplier, which we'll talk about in a little bit as well. So getting back into stage one, the Founders Building, Building A is the large building. Building A connects to both sides of this, connect to the parking and the retail. There's 881 apartments, 2,700 square foot clubhouse, co-working space, roof deck, and a total of about 160,000 square feet. Building B, which is the new parking garage and the retail, connects through a skywalk, and there will be 336 parking spaces there. So everyone in A will be parking in B, and everyone that's in C will also be parking in B. And we have ample parking for everyone in that environment, which allows us to break out the parking and get more subsidy from the community related to the parking, and that's a major win for everyone. Apartment C, this is 100. So when I say parking, just remember it's 100% financed by a city incentive. So all of this parking is paid for 100% by the city incentives, which is what makes this so attractive, right? We pay for zero for parking. Parking today runs about $40,000 per stall in an underground environment, and on a surface or subterranean, but not fully terrain, it's about $20,000 to $25,000 a stall. So we're getting $40,000 a stall on a parking structure, 100% financed by the city incentives. And then C and D, here is the Central Commons and apartments and retail, which is 34 apartments. A gym, we're in discussions with the national gym operator to run a gym to provide also an amenity, as well as 7,400 square feet of retail. So I briefly touched on what we anticipate as we project forward 4 years from now, what we project the returns to be. We're projecting today a 19.27% project IRR to 4-year hold. And the risk is mitigated to each of us, to all of the investors, through the public-private partnership with the city of Rockford. The city of Rockford has really rolled out the red carpet here, and they're prepared and already have agreed to all of the incentives we're going to discuss today, which is the major victory. Before we even get in the ground, we have a major victory with all of the incentives we're getting for the over $100 million for 215 units that we're going to be discussing. So let's talk a little bit about the public-private partnership. So TIF, if no one's familiar with TIF, people use TIF word all the time, but it stands for tax increment financing. And the plan includes the following: is 100% rebate. So we get 100% of the money back on the incremental property taxes of the project. So the project taxes says at X today, all of the increase in property tax, we're getting 100% of a refund from that. And then we're resetting the tax increment district in 2023 to maximize our tax incentive. So we brought that number all the way down to as low as we can bring it to, considering this is an adaptive reuse. If it wasn't adaptive reuse, we would have scraped the soil, the site to get us down to just the dirt. But in this case, adaptive reuse to get us a maximum amount of value under this TIF. The second piece is the other city incentives, which total almost $30 million, $29.3 million from the city. So the city of Rockford is putting in $29.3 million. This is real dollars. These are real money coming from the city of Rockford for the benefit of Colman Yards and further for the betterment of the first phase. Now, yes, phase 2 and the subsequent uses will also get the benefit of the 29.3 million, but this first phase is getting it right away. And then in addition to that, we've got the mayor's office has been involved, the alderwoman that's been involved. They've conducted multiple, and there's been 100 private meetings with companies, nonprofits, and other stakeholders in the Rockford area, and they all support Colman Yards. They've seen this blight sitting there for years, and they're so excited. The community, the leadership, the business owners, the large corporations, everyone that is in Rockford today is so excited about Colman Yards and what it can do for their business, their community, jobs, job creation, stability, etc. And so we're projecting an IRR of 19.27% with an equity multiplier of 1.88 times on a 4-year hold. So let's go through these numbers because these are awesome. So what we provide as developers is what we call sources and uses. So here's our sources, obviously, and here's our uses. So as you can see, we're getting a construction loan for 11.5. We're getting a PACE loan for 10.3, and our investors, including the developers, are putting in a total of $8 million. The rest of the money after the $30 million that comes from this group right here is all city incentive. This all comes from the city. This all comes from federal grants. This all comes from historical tax credits. as you can see, where acquisition and construction costs come to $73 million, this is the total amount of costs. This includes the parking structure, this includes the development of the units, this includes the infrastructure, this includes everything. And then our financing costs, our soft costs, our reserves, and then if you see what happens here, this number comes back to everybody. So we have sources and uses. The deferred developer fee is an opportunity. It's part of the tax credit process that allows us to ratchet up the developer fee, and then the developer fee is getting brought back into the fold for the investors as well. So it's not paid to anybody, it's deferred. That's a very important key word here, deferred, and it's truly deferred. It's just a number that allows us to make the number bigger so we can get more bang for our buck. The larger the number, the larger we can get in terms of incentive. So we're projecting a 19.27% IRR. We're projecting a 4-year hold. We originally had a minimum investment of $250. We brought this number down. And the reason being is that when Josh originally went into the investment, prior to our involvement, he was seeking to just get larger investors. Our network at F Street has investors that range from $100,000 to $5 million. So I asked Josh, hey Josh, can we lower this number? And we agreed that we could do that. So we have the opportunity to bring in other accredited investors at a $100,000 number. Completion, we're already underway. So that's on its way. And obviously, to understand what an accredited investor is, we have a complete process on our website, fstreet.com, that walks you through our portal, and then it'll simply walk you through getting accredited. We use a third party called Parallel Markets. As a note, if you have another third party verifier that provides you with your letter of accreditation, we can accept that as well. This is just one vendor that we use. We have no affiliation with them. Once again, it costs you nothing. So a little bit about stage one. We anticipate the completion being in March of 2025, give or take a month or two, but that's our projected completion date. And so what does that mean? Here's what it currently looks like today. Here's what we plan on rendering it to. So it's amazing what is and what will be. It's certainly part of a great transformation of being a developer, seeing the blight and seeing the future, and actually fast forwarding to what March 2025 is going to be. It's really a rewarding process. Here's what a couple sample units are going to look like in the Central Commons, which is the smaller building, 34 units. This is a 1-bedroom type, 610 feet. The great part about these is that they have these unbelievable floor heights. 12 to 13 foot floor to ceiling heights, which really makes for an expansive and unbelievable way to live. It's really cool. If you ever get to see one of these units, or if you know anyone that's lived in any in Chicago has some of these buildings, they're really impressive and they make for a really great place to live. The Founders Building, this is the big building. This building is so grand in size. When you see it, when you just approach your vehicle to it, you're like, wow, what happened there during the time when the Colman Yards was actually functioning as a manufacturing facility? And then look at what it's going to look like tomorrow, or in March of 2025. You can see these are the walkways I mentioned over here and over here, which will be connecting you to the parking as well as to the other retail. This is an amazing setup. These skywalks are actually, there's a form of them there that were created forever ago, obviously getting rebuilt, but this is an unbelievable transformation to Colman Yards, and this is what this will look like in 2025. So the Founders Building will have 181 units. It's got a mix of studios, 1 bedrooms, 2 bedrooms, and 3 bedrooms. It's amenity rich, so all of our developments are amenity rich. This will have in-unit washer dryers, it'll have clubhouses, it'll have workout facilities, it'll have all of the amenities that create a Class A environment to live in. This building has 10 to 16 foot clears, which is really great. A 16-foot clear floor to ceiling is really a very special place to live. And those are afforded to us by the adaptive reuse of the existing structure. So here's what the campus is going to look like. This is the current condition. This is what it looks like today. So Founders Building here. You see the skywalks that are connecting you. This is where the parking structure will be going over here, and this is what it looks like in 2025. So historic downtown Rockford. Everyone says, everyone likes to inquire, what is Rockford, and tell me more about Rockford. And when I started learning about Rockford, I was like, wow, Rockford is an unbelievable city. And then when you go drive through Rockford and you spend some time in Rockford, you realize how vibrant and how amazing Rockford really is. So let's talk a little bit about Rockford. Rockford is the 5th largest city in Illinois. Population of almost 336,000 people in the MSA. For clarity, in Milwaukee, Wisconsin, we have about 650,000 people in our MSA. So Rockford being the 5th city there, it's got a great population. It's part of a federal trade zone. It's the 14th largest cargo airport in the United States. This was a surprise to me, but it's a massive hub, and it's used for a tremendous amount of cargo in and out of the Midwest. It's got a new federally designated regional economic development district. So this is a great opportunity to spur additional development in the Rockford area. And they have higher than average concentrations in engineering, manufacturing, R&D, and aerospace. So a little bit about the downtown. It's a half a mile from, our location is a half a mile from the downtown district. There's public transport access. When I was actually there, there was a rowing, well, when I was there last, there was I would call it a regatta. It's a rowing event that was occurring on the river. And it was amazing. I mean, you couldn't get a parking spot. All the restaurants were full. It was bustling. It was really fun to see. There's been more than $775 million of public and private investment in downtown Rockford. And then Winnebago County seat and center of government, finance, commerce, and civic life, as well as public transit access to our site, is forthcoming. So a little bit about the Rockford market and as a competitive subset to the other housing options that are in Rockford. The most important thing that I feel about this development that gives it the best competitive advantage is that the competition is incredibly limited in scale. So what does that really mean? No new market apartment developments of this scale have been built in Rockford in the last 20 years. So yes, there are apartments that have been built. Yes, there were some great new developments there, but they've been under 65 units or less are being created. So this is a 215 unit and it could be 900 units after multiple phases. But the competition is very small in terms of what other units are being created or what competition this development, Colman Yards, will be competing against for renters. The current vacancy in downtown Rockford sits at an unbelievable 0.6%. Not 6%, but 0.6%. That is a really, really low vacancy factor. Like most developers, we rely on third parties. We have used Tracy Cross as an industry, well-received industry expert in market studies. They've done a market study for us. Tracy Cross does a phenomenal job. If you've never heard of them, feel free to look them up. They are a phenomenal outfit that does a lot of great on the ground, boots on the ground development, research, as well as provide unbelievable reports related to demand, unit size, absorption, etc. So let's go through the financial summary on phase one more time here to give everyone a kind of an idea of how does everyone get their money back, what does it look like in terms of returns, and how do we project you, the investor, who are going to put their hard-earned investment into Colman Yards to get paid, and what is that investment going to look like? So as you can imagine, the initial commitment starts right here, right? We need $8 million. We don't need $8 million anymore, but we needed $8 million to get the investment started. Investment starts today. After year one, we have no income. We have no ability to produce income to the investment because we're in construction at this point. So at this point, there is no income return. In year two, by middle of year two, we anticipate the first buildings coming online to be able to start bringing in income. And we anticipate distributing out $440,000 of distributable dollars back to the investor. Year three, we're stable. So now we're stable, the property is stabilized. We have a stabilized cash flow of $1.5 $1.517 million. And so stabilized based on our projections, our projected rents, our abilities to manage expenses, we anticipate having this amount of money to distribute back to an investor, the investor pool. And then in year 4, we plan to have this amount of money, which is the 1.5 plus a refinance, where we will be leveraging the business with a HUD exit. And at that time, we will be returning your investment plus all of your profits, which should yield a 19.27% levered IRR, as well as an equity multiplier, which should equal the same number of 1.88 times equity multiplier. So how does it look from a promote slip? The GP invests 10% of the total equity. So J. Jeffers and F Street are putting in a total of $800,000. The levered pool is $7.2 million of investment dollars to the deal. Do you see the promote assumptions? We have GP equity at 10%. We have third-party equity or investors such as yourself at 90%. A preferred return. So there's a preferred return of 8%, and then you get a tier 1 return, and then a tier 1 promote, and a tier 2 return, and then a tier 2 promote, and then a tier 3 promote that gets everything back to you to get to equal the number that I just previously showed you, which is a 1.88 equity multiplier. And so with that, I want to thank you all for being part of our webinar this evening. Development is a powerful vehicle enhancing communities and creating value. We firmly believe in all that. Everything that we create creates value. It creates value for the community. It certainly creates value for our investors. It creates value for our equity investors. It creates values for our companies. We believe in, we're a strong believer in everything we develop. And I'd like to say thank you for joining us. My name is Scott Lurie with F Street. I can be reached anytime at scott@fstreet.com. And I'd like to open it up for any questions. If anyone has any questions, please throw them in the chat. Please don't be embarrassed or shy. If you don't have any questions today and have some in the future, I'm always available for questions to run through, as well as our investment relations team, Mitch Ferraro, or anyone on our team at F Street. All right. Well, it seems like we got a quiet audience tonight, but if anyone does have any questions or would like to ask a question at a future time, please let us know. I'm happy to run through this slide with you individually, or this presentation individually with you. Certainly appreciate your time this evening. This is recorded, so we will be sending this out as well. Once again, thank you on behalf of F Street and Josh Jeffers and Jay Jeffers and Co. We look forward to hearing from you. Take care.